Welcome to the fourth presentation in the series on understanding the universal business language. This presentation will focus on a particular use case, a scenario followed for the development of the UBL document library. The use case is procurement or purchasing. Procurement is a term that is used in different contexts. In the North American scenario, procurement is often seen as the tendering part of a purchasing process. And in Europe, it's seen as the entire process. So when we talk about procurement in UBL, we mean the purchasing cycle, the exchange of items between parties. Parties are roles such as customers and suppliers, and items are things such as goods and services. The overall scope of the procurement process in UBL covers from sourcing through ordering, fulfillment, billing, and payment. There are many documents used in each of those stages in the procurement cycle, and we'll talk about some of those in this presentation. The UBL specification includes a design, what's called an activity diagram, that describes the typical flow of information in a process. The diagram we're looking at here is the ordering process. There are two swim lanes, the vertical columns, one for the buyer party and one for the seller party. And we can see that the buyer party places an order. The rectangular box is the order document that is then received by the seller party. Seller party processes that order. That may involve some responses back to the buyer party, and it may involve accepting or changing the order. When the whole process has been complete and the buyer party has received their response, the buyer party then decides to proceed or not. So that's a typical ordering process. And the documents in the rectangular boxes here are the documents provided by the UBL standard. So we can see there's an order response. In fact, there are two order responses. One, which we refer to as order response simple, is a simple acknowledgement. The order has been received and accepted, or it's been rejected. The order response message itself can be more complicated and give more detailed response against the order. You can change an order that's already been submitted, and you can cancel an order. Each of those documents corresponds to a UBL standard XML schema. If we jump forward now into the billing process, we can see that now we have different swim lanes. We have the accounting customer and the accounting supplier. And the accounting supplier will raise an invoice that'll be received by the customer. They will reconcile that, possibly sending a response. They may receive subsequently a credit note. There is a different billing process involving a debit note. I'm just showing you one example here. This is a billing process with a credit note. And once those charges have been reconciled, they're then accepted. So we can see in a billing process, UBL provides invoice documents, credit note, debit note, an application response, which is a business level, a business application level response to indicate the condition of a certain transaction. So you would use the application response to acknowledge, for example, that the invoice has been accepted. And there are also equivalent document types for a self-billing environment. So in an environment where the customer actually raises an invoice against themselves, there is a self-billed invoice and a self-billed credit note. So after a short introduction to the processes that UBL can be applied to, I'll go into more detail with a particular case study scenario. And this is the scenario that we've seen and used in other tutorials. This is the IYT Corporation buying 100 kilograms of beeswax from a company known as Consortial, and they pay £1 sterling for a kilo. If we jump in to have a look at the UBL document instance, this is what an XML document describing that order line could look like. So we can see there is a descriptive note, there is information about the quantity, the amounts, the monetary amounts, a description of the item, its name, and various identifications, numbers or codes to identify that from the buyer and the seller perspective. That constitutes an order line. There then may be a request for delivery. So we're suggesting here that this is delivered to an address in Avon in Great Britain during a certain period. So between the 29th of June and the 3rd of July, we would like this delivered. It looks like during office hours. That would then be transformed into something like an actual delivery information. And we can see it was actually delivered on the 1st of July to the same address. We may also, in our invoice, create a payment means. So we would establish that we want this account to be paid, or this invoice to be paid into this account under the name Farthing Purchasing Consortia at this branch of this bank with this identification number. And an individual transaction, this would be a simplified invoice transaction. We can see that we've invoiced for 100 kilograms at £100, and we even reference the order that we created, we saw earlier. The invoice can include allowances. So this is a reason charge number 19, which is a code that means trade discount deducted from payment. So there is what looks to be a 10% discount fee. There may also be taxes, and this demonstrates what a tax would look like, 17.5% VAT. On £100 is £17.50, and that's the total of all taxes. Finally, on the invoice would have the legal monetary total, so the line extension amount, which is net of any allowances and charges, the tax exclusive amount, any allowances applicable, and the total amount payable. And you'll see from these pieces of information, there is what's called the calculation model that goes into how do we interpret these elements in a way that we can understand how we derived the payable amount. And the calculation model here is explained as 100 less 10 is 90 plus 17.5% tax on the 100 gives you 107.50. Obviously, the actual calculation model used is typically part of a business partner relationship. So that was a very brief introduction to UBL and its application in a purchasing environment or a procurement environment. Thank you very much.